Hello everyone, Clint Lee here, analyst for the Bauman Letter, and today we have the next edition of Your Money Matters. Joined by Ted Bauman as well, and today I want to talk about some recent volatility we've seen pick up in the markets. The news that's come out revolves around this ongoing developments with the coronavirus. It's continued to spread, it's reaching more countries. We have another case that showed up here in the US, and it's creating a lot of volatility we haven't seen, quite frankly, for several months now. And so I want to ask you, Ted, what are you seeing with these new developments? Is it something that investors should be concerned about, and how should we be positioning in front of this?
Well, thanks, Clint. Yeah, I mean, obviously, I think it's a human tragedy. First of all, it's something that a lot of people have predicted, and we'll clearly see more of these kinds of events as the years go by. However, having said that, I think there's a lot of optimism from what I've seen, particularly in the markets, because of the massive changes that have occurred since the last outbreak of a respiratory virus in China back about 15 years ago, the SARS virus. The Chinese response is completely different. They are working very hard to isolate the contagion. They're reporting, they're cooperating, they're doing everything they possibly can to try to nail this down. And it also looks as though the virus is maybe not as bad as SARS in terms of mortality. Having said that, obviously, it's going to have an impact. Sectors like airlines are already struggling. We've seen that global oil prices are falling because of the reduced demand for oil and gasoline in China because people aren't traveling. So yeah, there are some negative effects, but there are also surprisingly some pockets of opportunity there.
So when you mention pockets of opportunity, I mean, one place that my mind goes right away, whether it's the coronavirus or when you go back to, just even 3 or 4 months ago, that was the last time we really had the headlines from the U.S.-China trade war impacting stocks here. And you look at what's happened since then, the S&P's up 15% plus. Some other sectors are doing much better than that, obviously. So when you mention opportunities and I start thinking about opportunities, you take this market response, this investor panic that sets in, and that creates an opportunity to either add to existing positions or pick up a good stock or an ETF that you've had your eye on for some time now. And I guess I would ask you, is there anything that stands out in your mind that's been pulling back here recently because of this investor reaction that you would step in and take advantage of?
Well, absolutely. I mean, I think the first thing that comes to mind is something that that the Economist magazine actually pointed out in an article yesterday. They said, one of the big differences between now and earlier, the SARS experience, is that nowadays Chinese consumers are buying a lot of stuff online. So right now, today, as I speak, some of the big Chinese online retailers like Alibaba, for example, have seen a loss of share value, but they're going to bounce back. And that's a good opportunity to buy into those kind of companies, not only because they will probably see a burst of activity during the crisis itself as people use online shopping rather than going out to stores and things for things like groceries and all that, but also because these companies have long-term great potential given the nature of the Chinese market. So I would use this situation, as awful as it is, from a broader perspective, to invest in some of the companies in China that are actually, basically benefiting from online shopping.
That's a great point. Actually, I know there are ETFs that track that space. I know KWEB is one in particular, a Chinese internet sector ETFs. And that's a great point you bring up, actually, because when you look back to the SARS outbreak, everyone talked about the impact to Chinese economic activity, but online retail shopping was really in its infancy at the time. And I know the research that we've done recently, China's online retail market is worth $1.5 trillion. And I know that's bigger than the next 10 largest online retail markets combined, including the US. Yeah. And that's still been an area that's been growing 25% a year.
Right. So basically, in addition to the fact that you're probably likely to see a short-term gain by those companies once the dust settles, they're also just a good long-term opportunity. So that ETF that you mentioned is a great one. We'll make sure to list it in the cover for this video as well. There's another opportunity I see, which is maybe a little bit more on the point in terms of the situation. That is Chinese and global pharmaceutical companies. One of the things that a lot of commenters have mentioned about this particular situation is that it reflects an inherent problem in the way that the whole world really is facing, these issues, these viruses, and also things like antibiotic resistance. Is that a lot of the drugs that are needed to treat these things are not being developed because there's no market for them, but when we need them, they're not there. And so I think there's an opportunity perhaps to look at ETFs and potentially some companies that are involved in developing things like anti-coronavirus specific medications. There's some talk that the federal government and maybe some European governments and certainly the Chinese are going to put money, government money, tax money into developing these kind of medications. And so that's going to be good for companies that are pre-positioned to, to do this kind of research and sell those kind of medications. So I would say yes. I think that that's probably another area of opportunity that arises out of this.
Yeah. So I guess in the pharmaceutical sector, one ETF, one play that potentially comes to mind here would be a VanEck pharmaceutical ETF. The ticker's PPH on that. And the reason I bring that up is because what you've just highlighted is that the lack of tools to respond to this outbreak of the virus, lack of vaccines, and we know antibiotics has been an ongoing issue. That's not just a local issue to China. I mean, this has very much become a global economy, and we've already seen how quickly the virus has been transmitted to other countries. And so what's unique about this ETF, PPH, is that it's not just Chinese focused, it's not just US focused, it's actually globally focused. It has about 40% of its holdings held outside of the US and international market.
Well, exactly. And another statistic I think that to throw out there is that there are more than 1 billion international border crossings every year. In other words, 1 billion people move from one place to another, either temporarily for vacation or permanently or whatever, which means that one country's problem in this respect is every country's problem. And particularly where you have a disease where the incubation period means that you're not showing symptoms, but you're still contagious, that's really where it's important to develop medications that address, for example, a whole class of viruses. We saw it with HIV, where antiretroviral medication came onto the scene some years after HIV and AIDS first emerged, but when it did, it proved to be very, very effective. And all it took was a focus on the specifics of that particular kind of class of viruses, and that can happen again. But there are other opportunities that might be longer term, and some of them might actually really relate to the Chinese trade issue, and that is countries in the region that might benefit from the movement of industrial manufacture. You and I have spoken about Vietnam as an opportunity, and the opportunity there is that in addition to the fact that Vietnam is not considered a trade competitor with the US, it also is not seen as a source of this kind of instability coming from these unpredictable diseases. So that's another opportunity. Maybe invest in Vietnamese ETFs. Right now, historically, I think it's at a good price point. Emerging markets have been, kind of underpriced for a while, and again, that's something I think that somebody could grab at a good price now and see some appreciation, depending on how long this thing goes on.
That's another good point you bring up. Something I was thinking about earlier today is that China, just how it's become sort of the world's hub for manufacturing of so many different goods, whether it's electronics or any other kind of durables. But we've already started to see sort of this shift in production to other countries, and that's a good point. That what's occurring could maybe help accelerate, or maybe companies that have been basing in China for that manufacturing capacity. The benefit of being a little bit more diversified in your footprint. And I know specifically on the Vietnamese markets, another VanEck product, VNM, is an ETF that tracks those Vietnamese markets.
Yep. No, absolutely. And I think, that as I said, is related to the bigger issue of the Chinese trade conflict and just the general diversification of manufacturing supply chains around the world. Because, being diversified is the best insurance, not just for investors, but also particularly for modern manufacturing and so on. So I think that's a good thing. So there you've got three potential opportunities from what is a tragedy. And I think, particularly when it comes to the biopharma and the pharmaceuticals investments, it's also something that hopefully will help, if those companies are increasing in value, that'll give them the scope to spend more time and resources on developing, drugs that can stop these things from happening, because we need to have them before they happen. That's the critical message.
We've highlighted three ETFs, potential opportunities around the reaction to what's going on. I guess the last thing I would bring up, and maybe you can weigh in here, Ted, but when I think about it, I'm an investor. I've seen some good returns these last 3 or 4 months. Things really started to look like they're going in the right direction. We had the U.S.-China phase 1 trade deal. That uncertainty was out of the way. The Fed looks like they're on hold. That uncertainty sort of out of the way. And so just when I started to feel comfortable again, all of a sudden this comes in, hits the market. I know as we speak right now, the market's down over a percent today. I guess what should I be doing with my portfolio here to make sure I'm not being too short-sighted, yet being cognizant of the opportunities that could be ahead of me?
Well, my immediate response is don't do anything with your portfolio. The markets, particularly the U.S. market, is at high valuations, and when that happens, they tend to be more volatile because people are asking themselves the same question you're asking. Can this continue? Is this the turning point? Whatever. The experience of SARS was that the markets did dip for a while, but they rebounded very quickly. And for companies that have no intrinsic exposure to the risk that comes from this particular scenario, from disease, companies that are not in the airline industry, they're not energy companies, they're not, that sort of thing. There's really no reason to sell them, even if they do experience a pullback, because if you do, you're likely just basically to lose your money, and they'll continue to rise. So I think, pending further developments, now is not the time to sell. This is not an ongoing threat. The key tipping point in the SARS instance was when the number of new cases began to decline. In other words, when people stopped transmitting the disease, and the Chinese are being extremely aggressive about this, and they can be because they can do whatever they want, the Chinese government. So my advice would be don't do anything, wait for things to unfold, and keep an eye on our alerts, because if something does change, you and I will be telling the Bauman Letter subscribers and also Bauman Daily readers to make changes if it's necessary. We're not there yet.
All right, very good. Yeah, absolutely. Stay tuned for more updates. We'll wrap up here with those comments. This is Clint Lee and Ted Bauman for Your Money Matters. Thanks for joining us today.